Inflation is on the rise, interest rates are going up, and investors are panicking because these two forces are causing serious problems for the market. So, in the past, many have described crypto as a hedge against the stock market. However, as we've talked about before, crypto actually sits further out on the risk curve than most traditional investments, and therefore will usually suffer even worse in downturns. Remember, crypto is a hedge, but against fiat currencies, not against the stock market. So, with the market apparently set to suffer even more in 2022, is now still the time to be buying crypto? Or should we consider selling? Hi and welcome back. My name is Tom Heavey. I hope you're doing well. Let's get straight into our first clip.
For somebody that's sat in traditional finance for most of your career, how and to what extent has the perception towards crypto changed, and how much further is there to go?
I think almost everybody in finance now understands there's something very big going on, and there's a general panic to get out of finance and into this new world. I mean, I get hit up by, everybody from partners of Goldman to asset managers to everybody saying, how do we move to this world? So I think the force is unstoppable. It's the time that's unknowable. But as we know with exponential trends, they always feel slow, and then you look back and suddenly everything has moved. If you think of the exponentiality of what's happened in the digital asset market since, I went irresponsibly long back in, April, March 2020, right? That was a Bitcoin only world. Yes, other people were involved in other stuff, but then NFTs, DeFi, social tokens, DAOs exploded. This had all been around, and they were like, no growth, like this. And that's what's happening here. I don't know anybody in the financial space who's now not looking to get involved in some way, shape, or form. I've spoken to the biggest private equity firms in the world, the biggest asset management firms, the biggest banks, everybody. I've given presentations, endless presentations to, investment committees, boards, everybody about all of this stuff.
Did you think the recent volatility, downturn in prices, changes, any of that are at this point everybody's past worrying about that?
I think everyone now realizes it's a feature and not a bug, that you don't get exponential upside without high volatility. That's how risk reward works. And the question is do you get compensated for the risk with the reward? And a 50% pullback versus the multiple 100% upsides you get over periods of time shows that time and time again it is well compensated for. So I see no change at all in the number of queries and who I'm presenting to about this. I don't think any of these big investors even care about this volatility, because they need a volatile asset as well in this world, because bonds and other stuff are just non-volatile assets and they can't generate returns, and they've got pensioners who need to reach a hurdle rate and they ain't going to do it in bonds. So they have to take risks. They understand that.
Yes, and there's whole new ways to have higher risk and higher returns, but also just generate yield in crypto, which I think is a whole new space, from staking yields, from borrowing, to using these decentralized protocols that I think asset managers are just starting to wake up to, that perhaps staking yields are the new bonds, for example.
Exactly right. And also they're learning that there is more alpha in this space than there is in traditional markets, because there's less capital in it. I mean, I don't know, it's probably a trade secret, but it'd be very interesting to go and ask your trading floor the returns of the crypto traders versus traditional markets traders.
Yeah, it's a much more immature market. It's a much more inefficient market. I think that there's there's just a lot more alpha in crypto, which is one of the reasons I think that there's a lot more. I think that there's opportunity for new asset managers coming up in both traditional and crypto, but especially in crypto, because it is such an inefficient market. The data is so available.
And also think about the sheer number of tokens, protocols, all of this stuff that's going to get even harder when it comes to social tokens and sports teams and pop stars and brands get involved. Now we've got NFTs, hundreds of thousands of these things, right? So you've got an exponential growing number of assets the capital going to the space is not exponentially growing to catch up with it. The complexity of the products like DeFi is going exponential. So all that looks to me like is that's alpha everywhere, all over that ecosystem. And the capital cannot grow fast enough to arbitrage away the alpha. That's why this whole thing is what we're talking about. It's because that is why the magic is there.
Absolutely. It creates a ton of opportunity for a ton of people. It's a fantastic time to get into this market because it's big enough to be real, but it's also small enough that it's still wildly inefficient in some ways.
And that's why, going back to where we started this conversation, tokenizing asset management in its various guises, whether it's centralized, decentralized, individual traders, pools of funds, DAO structures, that makes total sense in a world where the number of opportunities is going exponential. You need to scale. I mean, you're simply not going to scale a hedge fund strategy like Millennium or somebody of that sort in the traditional world to manage crypto. You have to think differently. You're going to have to think broader, and you're going to have to think further out the risk curve and where you're sourcing your returns in terms of the kinds of traders you go to. So, it really is a revolution going on, and it's super exciting. And I think a lot of people, even listening to this, haven't really yet figured out how big this is and how much is about to change. But everything is going to change.
Everything's going to change. It's a jump we're incredibly bullish on. We're investors in a bunch of things in the decentralized asset management space, including avant-garde finance, as well as other platforms for structured products, for active management, for building indices, kind of a whole bunch of things, because we truly believe in this this revolution that it is taking. And I know we're running out of time here, but is there anything else that I should ask you, Roaul?
No, I think we've covered a lot of ground. What I really want to do out of our conversation is frame it for people how big this is. That what I think about investing, I'm sure you do too, is the best thing is when you've got the wind in your sails behind you, when you've got the secular trend and it's at the point where it's curving upwards. When that happens and you invest within a space, so let's say this kind of decentralized asset management area, well, with that tailwind behind you, your probability of success is going to be extremely high compared to, let's say, investing in banks where you've got headwinds. So it's the obvious thing of secular investing in an exponential trend. People get freaked out by where we are now. Where's regulation now? Where's the adoption now? Where's the big fund that's formed this way now? The point is you need to live in the future and see where it's going.
Okay, so the first thing to acknowledge is that even though Roaul is maybe the most smiley person I've ever seen in my life, times have been tough for investors over the past few months. Now, if you've been in the crypto space for a while, you might still be in the green, in which case, maybe you do feel as happy as Roaul does. However, if you've only recently purchased crypto, you're probably feeling somewhat panicked. Believe me, I've been where you are today, and I know exactly how you feel. The thing is, on YouTube, there are so many different people telling you either the market is headed higher and it's going to explode soon, or it's time to sell now because the crash is coming. They all say it with so much confidence as well. So I'm going to play an old clip for you now from my channel back in November 2018. So this clip was from around 3.5 years ago. The video is still up on my channel if you want to check it out. And the reason I want to show this to you is because this clip provides the perfect setup for where we are today. Let's give it a watch. There are many people saying completely different things and no one knows who is correct. I have my personal opinion. I am nowhere near arrogant enough to simply believe that because I think it's correct, it is going to come true. Having said all of that, you watch these videos because you want to hear my personal opinion. Well, my personal opinion can be seen from the fact that I have recently just bought more. I've actually added to my stash of Bitcoin by buying back into the market when Bitcoin crossed around about $4,000. So personally, I think we are relatively near a bottom. Having said that, I can also see cryptos going lower. I wouldn't be that surprised if we actually saw a 2K Bitcoin. Sounds crazy, I know, but then I fully believe after that, we're going to see another bull run, and we're going to look back someday and say the difference between a $3,500 Bitcoin and a $2,000 Bitcoin is so insignificant in the long term that it wasn't really worth trying to predict the exact moment we hit the bottom. So in this clip, I talked about how I had no idea where the bottom was. Crypto could have dropped another 30 to 40%, or it could have exploded higher. Now, as it turned out, Bitcoin dropping below $4,000 was basically the bottom. But honestly, I had no idea. I'm not going to sit here and claim this was some master move because it really wasn't. It was luck. But what you find with investing is that luck tends to favor those who do two things. Number one, think in long-term time horizons, minimum 5 years. And number two, those who overcome their sunk cost fallacy. Now, you see, in investing, there is this phenomenon. It's called the sunk cost fallacy, and it messes up so many people. It's a mistake where us investors tend to make our future decisions based on what we've done in the past. So, as an example, let's say you bought Bitcoin at $60,000. Today, you've lost around 30 to 40% of your money. You probably feel like selling to avoid losing even more. Now, let's instead say that you bought Bitcoin at $6,000. Today, you'd be up around 6 times. You wouldn't feel panicked at all. You'd be so far in the profit that you're not too concerned even if there is another downturn because you'll still have made money. In this situation, you're happy to let your investment play out. So I've just described 2 situations there, and how you view the future is different in each situation. This is the fallacy. The truth is, the future is the future. It's entirely independent of the past. It doesn't matter if you've made or lost money so far in the past. The best actions in the future are simply the best actions. Forget the past. So as human beings, we're all very heavily influenced by what we've done in the past. But if you want to be a good investor, you need to try to let that go and just analyze what you think is going to happen in the future. Or said simply, forget the past, focus on the future. Now, around the time of that clip, I was talking to my parents who thought I was a little bit mad for continuing to stick with crypto despite most people thinking it was dead. I said to them at the time that I had made the biggest mistake in investing. I had bought in the mania stage of a bubble. However, in spite of that, I said I wasn't going to make the second biggest mistake. I wasn't going to sell after the bubble had burst. Once prices had crashed, this would have been the worst time to sell, and it would only have compounded my original mistake. Now, don't get me wrong, I constantly second guess myself here. Every instinct in my brain told me I should sell because the price could crash further. I think this YouTube channel actually has really helped me in that sense, because being able to be somewhat accountable to you over the years, I've forced myself to stick with the advice that I give out, not my own stupid instincts in my head. So nobody can tell you if you should buy or sell crypto today. What I will tell you is do not let your past actions influence your future decisions. Whether you've made money or lost money, put that to one side, because allowing that to influence you, that would be a mistake. Instead, pretend you've never invested in crypto. Take some time to just analyze where you think the market is headed in the long term and then decide from there. So personally, I think crypto is going to have 10 times more adoption in a decade than it does today. Now, I don't see another market around with that kind of growth rate over the next 10 years. So personally, I'm still bullish. But like I said in that clip though, I honestly have no idea what will happen today, tomorrow, or even for the rest of this year. If I'm not planning to sell in the next few years, which I'm not, then everything in the meantime is just noise anyway. So those are my thoughts. Now I'm interested to hear yours. Are you buying, selling, or holding your crypto? Let me know in the comments below. Thank you for watching, and I will see you again very soon.